And what I do is I start from start to finish. I'll go through it. I find out who they are. You know, where do they work? How many kids? I mean, it's part of the application. Where do they work? Where, how many kids they have? Not that that has anything to do with your approval, but I want their life. I want to know what their life is, so I can understand why. Okay, they're moving 3 doors down in the same neighborhood. Why are they doing that? Because you do get those people that want to stay in the same community because they're kids, or they have whatever is going on in their lives. Well, sometimes the application doesn't tell you the whole story, and so sometimes I will pick up the phone and say, "Tell me what you know. What do you know that I don't know?
Right.
Help me
make this
help me find a way."
Yeah. The idea is called the Huddle because, I love
Southeast
coffee
Huddle
and Southeast Huddle.
Yeah.
And we have our internal huddle.
Yeah.
But the idea was we get a group together and just have conversations and talk about mortgages. It doesn't always have to be somebody who works at New American Funding. Like
that's a good
eventually
idea.
I would love to have a home inspector, an appraiser, a real estate agent, right? A builder, have different people who play different parts in our industry because there's a lot to it, and we all have our roles. But I did want to have an underwriter, and I thought, who better than Tricia Elliott?
My journey started 40 plus years ago.
Wow.
I know. Actually, one of the loan officers here, she taught me how to process when I was 19 years old. Nancy Barlow, yeah.
Because she's been in the business 50 years.
50 years,
50 plus.
yes. She taught me how to process. I worked for a mortgage company, processed, and then I went to work for a builder for a couple of years, and then I came back on the mortgage side, processed, went to work for a company and was their supervisor for processing, and then did some other things on the back side as far as operations are concerned. Ended up going into underwriting. That was one of my desires, was to go into underwriting. So I did that in 1989. I think I got my FHA DE, which I don't use. I don't underwrite FHA loans anymore, but I got my FHA DE in 89 and went into underwriting. Cheryl, helped me to get into underwriting. So I, got my feet wet. I was there for 4 years or 5 years. And then in 2000 must have been 2001 or maybe 2000, I don't remember. God, that seems like so far.
It
was so long ago. Oh my God. I was like, you know what? I'm watching loan officers bring in loans, and I'm looking at these loans, and I'm underwriting them, and I'm conditioning them, and I'm like, I can do this. They're good at what they do, but I'm good at what I do too, and I can do this. So I actually decided to go back to go into sales. I contacted the builder that I worked for, and they, put me on their list. Worked my tail off on the weekends, every weekend, Saturday and Sunday. Yep. 9 a.m. to 9:30, 10, 11, 12 o'clock at night every day. And, I did really well. I was one of the top producers for the company. And then I had a change. My son got married, had a child, and I wanted to be part of my grandson's life. And you can't really do that. You can, let me take that back. You can do it in sales, but it's super hard. And it's super hard especially when you work with builders. It's different when you work directly only with realtors as resales, because they understand a little bit different than builders do. And I'm not saying builders are different.
No, it's a different sense of urgency, I think.
Yes.
Because when the buyer's in the community.
Right. They want you now.
They need it now because they want them in a contract right now.
Right. Exactly. And not that resales doesn't want the same thing, but it is different. And so I felt like I was always on. I was talking with people on Saturday night about their credit, and and then you help them fix their credit, and then they go somewhere else, and it's like So my grandson being born was a pivot for me, and I'm like, you know what, I want to be grandma. And so I worked my way back into operations, and I've been back in underwriting for 8 years. And love it. It truly is my calling.
You're gonna beat this pillow.
I'm so sorry, pillow.
You go really sound. No, I'm just thinking. She was gonna go back later and go, what is all that?
What the hell was that noise?
We both talk with our hands. So
yes, we do. I'm gonna talk her. Yeah. But oh my God, I mean, like truly underwriting is my calling. I mean, I loved working with buyers, and I loved working with real estate agents and builders because that satisfaction of going to closing and going, you know what, I helped them do that.
Yeah.
You know, the God-given gift that's inside of me helped them to do that. And now I'm doing the same thing almost. I'm helping the ones that, you know, my team, the people that are in my company, the loan officers that I work with, I'm helping them get their people to the point where they're going, oh my God, I just bought a house. You know, I get that same satisfaction when I don't hear it often because, you know, underwriters don't hear anything except for, oh, we've screwed up. Or, oh, well, every once in a while, well, yeah, you get a little rah-rah, but, you know, most of the time it's, hey, can we fix this? And it's like, okay, yeah, we can fix it. But
Well, it's different here. Okay, so you got back in underwriting after we got back to New American Funding, or got here.
When I got here, yes.
Because it was funny. Okay, so before we came to New American Funding,
I was with another loan officer. I was a loan officer assistant.
I know. I interviewed for your job because you were leaving.
I was leaving.
Because I had gotten out of the business for a little bit, and I wanted to get back in. But I did not have any business because I had been out. So I was like, what better way to get in than get with a team so I can build back up my business again? And anyway, a mutual friend put me in contact with the loan officer you were working with at the time. And they're like, no, Tricia's going to go back into underwriting. She's leaving the team. And so I came in to interview for your position, which was crazy. I ended up going with a different company just because that particular group is the group I was with when I got out of the business.
Right.
So for me, it was just going home.
Right.
So I went back there. But anyway, it was just crazy how our paths were crossing.
I know. It's like, in fact, I heard when you came to that company, I'm like, oh my God, I'm fixing to go there.
I know, it was great. It worked out perfect.
I know, it did. It really did.
For me, you were like a godsend because I'll be honest, up until that point in this business, and we were just talking about this with Johnny in a previous segment, that underwriters as loan officers, we were scared to death to even talk to an underwriter. And honestly, you couldn't talk to underwriters. I mean, you remember this because you were on the sales side. If an underwriter was calling you, you didn't want to talk to them.
You dropped what you were doing, and it's going to be bad news.
Your loan was declined.
It's bad news. Usually bad news. Yeah.
But if you had a situation with buyer and you really believed in this loan, the only way you could communicate with the underwriter was like cover letters and notes in the file. There was no conversation. You couldn't talk through scenarios. I didn't have an underwriter I felt comfortable just calling and talking about, here's the situation. What do you think? What are your thoughts on this? How could I structure this? What loan do you think might be best for their situation? There was no relationship with an underwriter. That was like unheard of. You were scared of underwriters because they were the ones who were going to kill your deal. Like you thought their job was to say no, to find a reason not to make it work.
You know what? Unfortunately, underwriters have been given a bad rap because there are a lot that are out there that are hell bent on trying to find a way not to do a loan. I have to say, at NAF, we don't do that. You know, the majority of the underwriters in our region, and I don't know about other regions, but our region, you know, we're all about what can you do to fix it. Probably 50% of the calls that I make to a loan officer when I'm underwriting a file is hey, I'm going to suspend it. I'm not going to decline it, but I'm going to suspend it. But I need to get blah 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 blah. We need some stuff. The other 50% is, hey, tell me what you know. You know, the cover letter doesn't say it all. It definitely has changed over the years. It definitely has changed. It used to be oh my God, please don't call me.
Well, Johnny said it's actually, he never noticed it either. I mean, it was happening before New American Funding. It was a different culture here. And I will say, it does not feel like sales against ops. It feels like we're all just part of the team. You said Southeast Huddle earlier. Like Southeast Huddle is, we have an internal meeting every month where we all get together and celebrate each other. We celebrate our wins. Everybody.
Yeah.
It's a big rah-rah moment where we just get to love on each other. And it sells and ops. And we try to do that because we try to remind each other we are all on the same team. We just want to help buyers own their own home and whatever that looks like, whether it's, you know, somebody who's trying to buy an investment property to help create wealth for their family, or they're buying their first home, or it's a grandparent maybe right sizing.
Not downsizing, but right sizing.
Right sizing. You know, we're all on the same page. We all want to do the same thing and get them, you know, in that home.
The underwriter is not just looking at the file, but they're also making sure whatever program that loan officer has decided that the loan fits in, that the borrower fits in those guidelines, whether it's Fannie, Freddie, FHA, VA, whatever. Whatever program it is, the underwriter is responsible for making sure that the borrower fits the guidelines. Guidelines can be gray. There's a lot of black and white, but some things are gray, and it's up to the underwriter to determine what, if there's gray areas. Can somebody override it? Can an exception be made? Whatever to that degree. So, but basically the underwriter.
Because you're putting your name on it.
I'm putting my name on it, yes.
You're saying, I believe in this.
These people are going to make their mortgage payment.
Yeah.
I promise you they're going to make their mortgage payment every month until the loan is done.
So you can see why an underwriter might be a little skittish, like maybe not want to put their name on something.
Right. Well, plus two, I look at a loan as if it's my money. Am I going to give these people $200,000, $500,000, $1 million of my money, and are they going to pay it back?
Right.
And does it fit all the parameters of the guideline? And is there some squeaky areas? Can we fix it so that it does meet everything? So basically, the underwriter is the one that says yes or no.
Right. So it's still scary.
Or sometimes maybe.
Yeah. Or maybe not today.
Maybe not today, but maybe in 6 months.
Yeah. But you help. I've seen you do this where maybe it isn't today, but you work with a loan officer and say, okay, but if they can do this and this, and then come back to us in maybe 3 months or 6 months, then it would be a yes. It's not a definite no.
Correct.
It's just
we want to set them up for
always
success. No. It's never always no.
Right.
It's always let's fix it.
Do you think that's because of your sales background?
Yes.
Having
absolutely.
been customer facing, if you will.
Yes.
And really working with borrowers. Like these borrowers or home buyers.
Well, they're scared to death.
They have faces.
Well, they're scared to death.
Yeah.
And you're right. That's why I go through the application to see who these people are, because I don't see them anymore. The days of people coming into your office and sitting down and signing the loan app and doing they don't do that anymore. Everything's over the internet, and you get their ID and you see who they are. And in this community, a lot of people work with each other, so we all know each other. I might see a customer that I underwrote the loan for in the grocery store. I don't say anything because they don't know who the underwriter is, but because I don't want to flip them out. Oh, crap! Somebody down the street knows my stuff. I don't want to do that.
Right.
But we're all in the same community.
And there's a reason why underwriters don't have conversations.
Right.
With buyers.
Right.
You are kind of hands off. You are communicating not directly with the buyer. You're communicating with the loan officer,
right,
or the mortgage consultant, or mortgage banker, whatever they call themselves, whatever our titles are.
Yeah.
You're communicating with them, or the loan processor, the one who's actually helping them with the paperwork, processing, packaging everything, getting everything to you. If you need additional documents, the processor usually reaches back out to the buyer.
Yes.
And ask, hey, can you send me that updated bank statement? Can you send me your most recent pay stub?
Right.
Can you write a letter explaining why you're moving 3 doors down and the house is smaller than the one you're in, right?
Right.
We need these explanations. The processor helps get that on your behalf.
Yes.
So that way you don't ever put in a position where, they can, beg and plead or you got to have that separation.
You do have to have
Otherwise,
that separation.
there might be a conflict of interest.
Absolutely would be. Absolutely would be. But you're right, though. I put on as my best friend will say, would you please put on your loan officer hat for a minute? I'm like, sure. And, and so I help, scenarios, like the other day when you and I had a conversation, it's like, what can we do to make this work? And you've got to have this, this, and this in order to at least fit into this kind of program.
And that gives me more confidence as a loan officer to go back to my real estate agent partner and say, hey, listen, I had a conversation with my underwriter. And here's, kind of what they suggested. Here's some things that we see that might be an issue that we need to overcome early, rather than turning this in and it becoming like a declination, which we don't want to happen.
No.
So it gives me more confidence to be able to have that conversation, rather than me just guessing what you might want.
Right.
Okay, so with that, I actually have a list of some questions that home buyers, might wish they could ask an underwriter. But I already asked you the first one. What exactly does an underwriter do? That helps. Do you ever talk to the buyer directly? No.
No.
How long does it take you to review a file?
It depends. If you have a cream puff loan, 45 minutes maybe, meaning cream puff, meaning they're W-2, they already have their money in the bank. They might have to sell a house for their funds to close. Their credit's okay, good, meets the guidelines.
Yeah.
I have an automated approval because we rely heavily on automated approvals. 45 minutes, give or take.
But they don't own 10 rental proproperties, have 5 businesses.
Right. Now those are like 2 or 3 hours.
Yeah.
2 or 3 hours long. You just and you have to set aside your mind. I go in going, okay, what do we have? That's why I go through the 1003 or the application. What do we have? Are they buying as a primary? Do you have other investment properties? Do you already have your money saved? Are you doing future savings? Are you doing a gift? I mean, whatever the case may be. So
a lot of factors to look at.
factors to look at.
And we already talked about this. Are you just looking for a reason to say no?
Nope.
Which we know you're not.
I'm looking for a reason to say yes.
Yes. Okay. Do you actually read everything we send?
Yes. I do.
Yeah.
The first time around, maybe not the second time, because like as
You're
the
just
files,
getting updated information.
I'm seeing updated information. I don't go back and let's pretend that the borrower already has all their money for closing. We already have it, or a gift or whatever. We already have the gift letter. We already have their assets in the file. I'm not going to go back and re-underwrite the assets again. If you're sending in a file that's got, updated pay stubs or divorce papers or something that I need to look at, those are the things I'm going to look at. I'm not going to look at the stuff I've already looked at.
Yeah, but if I'm taking time as a buyer, let's say to write a letter of explanation,
yes,
you're reading that.
Absolutely.
You're actually putting your eyes on it.
I'm putting my eyes on it, and I'm making it make sense. Because sometimes people will send in an explanation for something, and it's like, oh, well, I moved out of this house to move into this one, but then I moved back because this was a better opportunity for my wife for employment, and you're like, what?
Yeah.
And so that's when
you got to really.
Yeah, right. Sometimes I mean you understand what they're trying to convey to you, but that's when you're like, hey, loan officer, hey, processor, can you help me? This doesn't make any sense.
Right.
Help me make it make sense. So yes, I do read everything.
Okay. Why do we need to source where our money is coming from? For if we're putting 5% down on a house, why do we have to show where that 5% came from?
Because the money has to be verifiable. It can't be mattress money.
Mattress money. But it could be a gift from a family member. We just got to show that the family member.
Yes. Just has to be verifiable funds.
How recent do documents have to be? So if I want to buy a home and my bank statements are 6 months old.
Your documents have to be dated within 45 days of your application. Okay. So if your application is July 15th, the latest would be May 31st.
Okay. So I don't need to send in February bank statements.
No.
Yeah. So if I'm also looking at purchasing down the road, maybe I need to go ahead and start looking at my bank statements now to see what's on those bank statements.
Right. And funny that you mentioned that. Some of the things that are hot button items are where buyers are buying things from Kohl's or Macy's or whatever, and they're doing it on the pay it in 4 payments. Klarna's, the Afterpays, Affirm, Sizzle, the SP Plus AFF, which is another form of Affirm. There's a whole slew of them, but those are like the main ones that pop up. When those pop up, we as underwriters have to look at that as additional debt. And so we have to get more paperwork. So if you're planning on purchasing later on, go ahead and pay those off so that they're not on your bank statement. Please.
Or if you've got a bank statement where, let's say, you just didn't check the balance and maybe you made a purchase and it went into the negative.
And that does happen. That does happen. It happens. Honestly,
just don't let it happen more than maybe once
or twice. But you know what?
You should be able to explain it.
Well, you should be able to explain it, but it also depends on if you have an automated approval. Like I underwrite VA and conventional loans. I don't underwrite FHAs. So on VA and conventional, if you have an automated approval, so we run it through Fannie and Freddie's system. You have an automated approval. You don't I mean, you look at their bank statements because you just want to make sure that they're like got their finances in order. But if you see, okay, you have an overdraft and then they pulled money from a savings account to pay for their overdraft, that's still their money.
Yeah.
It's not like they're going into
Sure.
the quote negative. It's when you have an automated, not an automated approval, you have a manual underwrite. Those can be issues. NSF, meaning, because that just means the borrower's not taking care of their finances
a very
properly.
large deposit, say $3,000 just cash that got deposited, and you have no way of showing where that money came from, maybe just wait another 30 days for the next bank statement.
Either that, or a lot of times we'll back that out. Like if they have
just don't give them credit.
Just not giving them credit towards it. Right. So let's say, for example, they may have $13,000 in their bank account. Well, that $3,000 was cash. You can't document cash, so you just back it out. So they only have 10 to work with.
Gotcha.
But as long as they only need 10 or less, you're okay.
So it's good to just look at those bank statements and see if there's anything on there.
Please.
And then, of course, if you've got any accounts, like you were talking about, like these Kohl's type,
Sizzles or afterpays and those types of things.
Just check with the loan officer because it may make sense. Just pay them off.
Yeah, pay them off and then get another bank statement so that they're not on there.
So we don't see those.
Right.
Okay.
Not that we don't want to see their debt, but honestly,
you don't want to add debt that you don't need to.
No, and the majority of those accounts, they really are paying for. They're like every 2 weeks, or some of them are every week, $19 every week. So they're gone in a month. But unfortunately, what happens is it causes, when processors have to call the borrower and say, I need you to give me the documentation on this. Well, those things are apps. They're
Gotcha.
apps.
It's hard to get.
So it's hard to get everything to match up. And then the borrower gets frustrated, and then they're like, I'm just gonna, and So we don't want frustration. We just want it to go a little smoother.
Well, and that's a good point. So sometimes when, as a loan officer, I'm going to ask for pay stubs, W-2s, bank, whatever the loan program requires as far as documentation to support that they make the money and have the assets.
Right.
But I may go to underwriting. The underwriter may come back and say, oh, I also need XYZ. It doesn't mean that I forgot.
It's not that you missed
It's just
anything.
that there may have been something I turned in, like a bank statement, that showed these payments that need to be addressed. So now the underwriters come back saying, we just have to we got to cross every T, dot every I.
Right. Well, and the thing too for a lot of loan officers and processors is they don't want to over ask for stuff up front. I mean,
ask for more than you need.
Ask for more than what you need, but truly let the underwriter be the one to say, hey, I need, source of funds for this $30,000 deposit. Let the I mean, if you know about it, of course, ask the borrower, but if you don't really you haven't really looked at the
Less
bank
is
statement.
More in the beginning?
Sometimes less is best. Sometimes less is best. Like, for example, you have a borrower who is purchasing new construction. They're not closing until October. Don't give me May and June's bank statements. I mean, if I need them to source their earnest money or their builder deposit, that's one thing. But if I don't need them, don't put that in there. Don't make me look at that. Don't make me look at that.
Okay.
Right.
So that's good. So but with that said, that means, the processor may go back to you as the home buyer and ask for additional documents, but that's okay.
Right.
We're just trying to do less is best in the beginning.
Yes.
And then just update and add as we need to.
Yes.
So that we're not putting too much in there that we can't take out.
Right.
Okay. Okay. So here's some income employment questions. So what if my income varies every month?
Oh God.
I know.
Terrible question.
I know. So
Terrible question.
if I, maybe it's overtime. I don't know that it's going to be the same each pay period, or it's maybe my bonus, or what are we looking at as far as the history?
We look at a 2-year
That's an
history.
awful question,
I know it's a terrible
That's
question.
an awful
Golly,
question.
come up with something better, Chris.
But a 2-year history.
Yeah, you have to have
Typically.
a 2-year history for variable income.
What kind of ties into the next question? Bonuses, tips, commissions.
Right, and those are 2 years.
Can you use those?
You can use those. I mean, you can actually get by with bonuses for a year. Even your overtime, you can sometimes get by with it for a year, but it depends. Did they work the overtime in the previous job? Did they change positions? What's the story?
Everyone is different.
Everyone is
right?
different.
So we have to look at the whole picture.
Right. Well, every loan is a puzzle.
Yes.
Every loan is a
I've
puzzle.
said that before.
Yes, every
I'm
loan
like,
is.
it is. You're literally putting a puzzle together.
You're putting a puzzle together. I mean, what pieces fit together for you may not be for our camera person. It may not be for Nancy's bar. I mean, everybody's picture is different. But yeah, variable income is you have to have a 2-year history.
Okay. Here's another tough one.
Okay.
Which is probably going to be, it depends.
Okay.
How long do I need to be on the job?
It depends.
It depends. Yes. So for
depends.
some people, you need to be we look for a 2-year history, which could
always
be
have
school.
to you always have to have a 2-year
But that could be
history.
school.
It could be school, yes.
You could have school transcripts for college or whatever, and then your next job.
Yes.
That could
Yes.
accumulate to 2 years.
Yes.
So that also depends.
It also depends.
Yeah.
Yes.
Why do you check with my employer?
To make sure you're really employed. Because unfortunately we have had some issues where people were not really employed.
Right. Yeah. And it's not always that we're double checking, hey, is this income actually what they make? It might be we're just calling the employer to say, do they work for you?
Well, it's part
and
of our
when did they start?
That's part of our due diligence too. When we send a loan to one of the agencies, we have to not only on our upfront part as far as underwriting is concerned, but on our backside when we actually go to closing and funding our loan, we have to provide documentation to the agencies that says, "Hey, we re-verified the borrower is still employed with the same employer."
Right. So if a buyer's thinking about changing jobs.
Oh, please don't do that yet. Yeah. Or if you do, I mean, if somebody's getting a better opportunity, you never want them to feel like, oh my God, I can't do anything until my mortgage is closed. That's not always the case. If they can provide what we need in order to verify their employment or verify their future employment, the agencies gives us some leniencies when it comes to doing that. So like if they're starting a new job a month after they close on their house, that's okay, but we have to have the paperwork that follows through with what their income's going to be, where they're going to be working, what's their salary, what's their position, all the stuff.
The best thing is check with your loan officer.
Please.
Before you make any changes.
Yes, that and additional debt. Don't buy anything.
Don't buy anything.
Don't buy anything.
Don't spend the money.
Don't buy anything.
Don't put anything on credit. Don't do the no interest, no payments.
Don't do the buy here, pay here.
No, don't do any of that. Oh, credit score. So what credit score do we look at?
It actually depends on the type of loan. FHA, don't quote me because I don't do them, but I think we'll go down to 580. I know that VA will go down to 580. They'll even do less than that, but there's certain parameters that we have to meet. Conventional, I don't always have an automated approval, so I guess they're at least 620 or greater.
Yeah. So you don't have to have like a 720 or 800 credit score to buy a house.
No.
I mean, there's just some factors that may play into that.
Correct.
Do you care if I have student loans?
No. As long as you qualify with them.
Right. Because some student loans, because we have to qualify you with a payment on the student loan.
Yes.
And there's certain documentation that we get to do that. There's certain payments that may show on the credit report, but we may need like an income-based repayment letter from the student loan agency just to document that. Will financing a car hurt my chances of getting a house?
Possibly.
Oh, if you're doing it after you already made a loan application.
Yes.
Sometimes
possibly.
refinancing a car can help.
Yes, it can. Yes,
Sometimes you can actually get a lower payment.
Yeah.
And might help you. Main thing I get out of it though is you need to work with a great company who has loan officers.
Yes.
Who also have great underwriters.
Yes.
Who have a great relationship.
Yes.
I do want to do this again because I know there's a lot more questions that buyers have, and it's good to have an underwriter's perspective on that versus just the loan officer, because we're just kind of trying to figure out that puzzle,
right? And
then turn it over to the underwriter to make sure
it fits.
It fits. We put all the pieces together correctly,
and
that it is something that Fannie Mae, Freddie Mac, which are conventional agencies, or FHA, USDA, VA, or any of the other out-of-the-box loans, those investors, we follow their guidelines, and it meets those guidelines. Just like, you got to be a certain age to go buy an alcoholic beverage.
Yes.
That's a guideline or a law, right?
Yes.
With us, we have the guidelines. You just have to fit certain guidelines. But every loan has totally different guidelines. So it's not a one-size-fits-all. Every conventional borrower doesn't look the same. Every FHA borrower doesn't look the same.
I can't even tell you how many times a day I look in the agency's guidelines.
Yeah.
And part of the reason is because they change. They'll change something 6 months ago that I haven't had a loan that had that particular change on. So I'm like, oh my God, can we do that kind of loan? And
Right.
sure enough, yeah, we can, or no, we can't, whatever the case may be. But it's constantly having to look up guidelines because they do change.
Yeah, which is why when we're talking to a buyer, a lot of times we look at their application, the 1003.
Yeah.
We look at it, we look at the income, the assets. We're like, okay, well, based on what I'm looking at, it looks like you would qualify for this much house. But I want to check the guidelines. I want to see, can I get you qualified for a down payment assistance loan? Where maybe you don't have to bring as much money to the table. Or would this other loan work better for you because maybe I can get a better rate?
Right.
And even though you may need to bring a little bit of money to the table, maybe I can get your payment down.
Well, and that's the biggest thing.
Significant
The payments right now are borrowers' biggest thing, obstacle to overcome. Is you buy a decent house, and I'm probably shouldn't even talk about this, but if you buy a decent house for $300,000 or $400,000, I mean, you're looking at a $2,500, $3,000 payment, and it's like, oh my God, and granted, you can't rent for that. I mean, let me back up. You can rent for that, but I mean, people are renting for $2,200 a month, and their house payment can be $25,000 or $3,000, and yeah, there's a shock that goes with that because it's still an increase. But oh my God. Oh my God.
Equity.
Yeah.
That you're like we were talking to Johnny earlier, his daughter and son-in-law, within 2 years they already have $60,000 equity.
Yes.
You can pay $2,200 or
Yes.
$25 in rent, which people are paying right now.
Right.
But there is no equity at the
There's
end of
nothing.
You're
They
not
get
paying principal
nothing.
down.
They get nothing. They're paying somebody else's payment.
So the question that we were asking in our last with Casey and Johnny was, is it a good time to buy?
Always.
Always.
Always. It doesn't
what we
matter
said
what
too.
the rate is. When I got in the mortgage business, the interest rates were 17%, and that was an arm. Now, granted, the average loan amount was $50,000. Oh God, it was $50,000. But 17%. It took a long time. A lot of changes in the government, a lot of changes in the agencies in order to get interest rates to come down. My first house that I bought, it was a 9.5% interest rate. My payment was $468 a month.
Yeah.
And 2 cents. And 2 cents.
Yeah.
But
I mean, everything's relative.
it is relative. That same house. Now, if I had that same house, it would probably be worth about $750.
Yeah.
$7. So I mean, I could have had a huge amount of equity if I'd have just stayed there, but I didn't. So
Right. Well, none of us do.
No, well, that's the name of the game. Real estate, you roll it over. You roll it over every 7 to 10 years.
Yep.
No.
So now it's always a
It's
good
always
time
a
to
good
buy.
time. Always.
Yeah.
What did they say? Love the house, not the rate.
Yeah. Marry the house.
Marry the house and date the rate.
Yeah. And then when
yeah.
we refinance, then you'll just re-underwrite
Exactly.
the loan, unless it's a loan that they don't even need income to qualify for. Sometimes you can refinance and
Every
you
once in a while.
literally just make sure you're still working.
Yeah. Every once in
There
a
are
while.
some streamlined refinances out there. There's very minimal qualification,
Yes.
as far as documentation
Right.
compared to when you got the first mortgage.
Right.
There are some situations like that, which is great. And that's helpful. And then, of course, we service most of our own loans. So you just keep making the same payments and
Yes.
funding it.
Yeah.
It's great. But thank you. I'm
You're
so glad
welcome.
you
Well,
came.
thank you.
We'll do it
Thank you.
again.
Thank you for inviting me. This has
Yes.
been fun. I enjoyed it.
We'll have to think who
I
we
like
can
to talk
bring
about
on.
stuff.
Yeah, no, I think it's great.